So following up on what we talked about before in terms of the initial balance breach to the, here we go, initial balance breach to the VWAP buy. All right. And by the way, I'll make that discussion a free video tonight. All right. So this will be part of our premium video conversation. So once you've got your initial balance breach here, you've got your pullback zone here. All right. Quite frankly, your validity, point of validity, by the way, is your clearing range low. Now, yes, you can put different stops just below the VWAP, but for me, I'm going to most of the time use the opposite end of the clearing. All right, so let's just stick with, for now, IB, initial balance breach, to VWAP. All right, and the clearing range, that would be the point of validity. Now, the next thing is, what about the wave, Rog? Am I allowed to buy the wave after the initial balance breach? I would typically say if the market is trending, you've got a better shot at it, right? Talk about trending markets. As we look at this close, this market just does not want to stop. I mean, my gosh, it just keeps moving higher and higher and higher because, you know, the economy is in such great shape, right? But golly, that's some kind of move there, gang. That's some kind of move there. What is this market trying to do? And I will tell you guys straight up, the powers that be want to crush the will of sellers. And I'm going to say this not because there's timing behind this and not because I'm predominantly bearish. I'm not bearish because I just want to fade the strength. I'm bearish because every common sense economic indicator, every common sense trajectory, I'm not even talking about high level macro. Common sense tells us the data about the economy is only going to get worse. And the only thing that we can do is print money against it, right? The bears will have the last laugh. And I'm not saying they're happy that the economy is going to get crushed. They're just trading what is real. What we're seeing right now is not real, gang. Okay? What we're seeing is 1,000% not real. And that's okay. It's real in that we're seeing it. It's not real from a macroeconomic or data-driven perspective. And someone like me who studies the data and trusts the data believes eventually the data and the macro and the debt and the business cycles will win. But for now, and now for 2 years in a row, 2019 and now into 2020, the Federal Reserve has made a concerted effort to circumnavigate the reality of macro and business cycles and debt cycles. Does it work? I mean, who knows? You're right. I mean, these are grand experiments. We don't know. Ben Bernanke proved to us that you can monetize debt, and that was the game changer. And you can call him the father of modern monetary theory. Print your way out of every conceivable problem. Coronavirus did not create this problem. Coronavirus revealed it. And I'll step off the soapbox now because that is some kind of climb. Wowee. Yeah, didn't Intel just report, who cares about earnings? This market doesn't move on earnings anymore. Oh my gosh. Okay. So anyway, we just, see, this is what's great about being a day trader. We just trade what it is. Do we care that this is an absolute manipulated by the Federal Reserve and the Treasury market? No. What do we care? Some days we're going to get long and win. Some days, like just the other day, we got short. Did we not have a terrific short just yesterday in the Russell and the S&P? So it's not like bears don't have their time in the sun. The cool thing is when you day trade, you don't need session after session of logical price movement. Because inevitably when the powers that be come in to step in and manipulate the market higher, it's much tougher to be a bear on the daily time frame because you need a whole lot more working for you day after day, session after session. But as a day trader, you can go both ways. You can be short one day, long one way, and you're free to not care about what's happening in the bigger picture. And I'll tell you, for me, as much as I kind of get salty, maybe saucy now, I'm a little salty and I'm saucy. When I start talking about this, I let it go for the most part because I'm just day trading or I'm staying flat. Because right now, it's the only way that, for me, I can feel comfortable and not absolutely miserable and angry at what I see. All right. So anyway, what do we have today? Let's follow the trend. Who cares that it's manipulated? Thank you very much for the manipulation, because we had the initial balance breach. We came back to the VWAP, and we have done nothing but sail higher ever since. So the question, though, is when can we use the wave? I will tell you that when it comes to the initial balance breach to VWAP type setup and V scores and so forth, I will tell you that the wave and even the propulsion dots don't have a big role here. So, and here's why. You might say, wait a minute, Rog, heresy. You're saying that wave and propulsion dots don't have a big role? They really don't in this kind of trading. In fact, you could even, just to clean it up, some of you, try it if you'd like. Try it if you'd like. Just for this kind of trading, you can remove the wave. You can say, you know what? Let's kind of take the wave off this thing. Right? We can take the wave and make it transparent. You can actually not plot it on Thinkorswim, and I'm going to give you guys some ideas as we set up for next week. You know, you can make the waves transparent, and so what we're really doing is we are then, did I not spell transparent right? Okay, so what we can do, there you go, is take the wave off there and just look at the V-score and look at the VWAPs and even take the propulsion off. Just disable it. You know, and for a lot of you might say, oh gosh, Rog, that's really good. I would leave the 3/8 propulsion on. It doesn't plot very often, and it does sometimes give you some interesting indication to like movement, possibly acceleration. So you can keep the 3/8 on there. All right. So that's a terrific question. Can we just use the initial balance breach and also use the wave? The wave and the propulsion dots are moving averages. They don't care about volume at all, right? They don't care about participation. They're just averaging high-low close or whatever we're asking it to. V-score, VWAP, V-profile are all about volume. And a lot of what we're doing once we get the indication of a clearing range breach, or in this case, an initial balance breach, what we're doing is saying, look, what are the volume-derived indicators telling us? So this would be a really cool way, and I'm going to save this as a study group. I'm going to just call it our, let's see, what do I want to call this? I'm going to save it as a study group, and we just keep marching higher. So I'm going to call this day trade volume day. I'm going to call the VWAP day trader. Okay. All right. So let's go to the ES and do the same thing again, because I don't want you guys thinking this is just some sort of one-off. All right. And I'll show you how to do this on Thinkorswim as well. So again, to show that it's not just a one-off, let's go to the ES. We'll do the RTY as well. What are we looking at? Did we get, for the first question has got to be, did we get the initial balance breach? And we did not. No initial balance breach on ES. So guess what we are not allowed to do on ES? Nothing in here. Nothing in here. So even though NQ did it, ES did not. What about the YM? So what's really key? High and low of the first 1 hour. High and low of the first 1 hour. All right. And then did we take out? Now, in some cases, you might say, but Rog, it looks like we took out the lows. And you're right. So if we took out the lows on the ES, but the NQ took out the highs, guess what we do on the ES? Nothing. And ES is saying, hey, I want to short it. NQ is saying, no, we're going to buy it. You have two choices. Do nothing with the S&P, do nothing with the ES, or buy it. You want to trade the ES in the direction of the NQ, or pretty much not at all. Okay? So then the question becomes, wait a minute, Rog, let's put a box around this thing, right? Here's my 930 to 1030. Did I not breach right here? Absolutely. So what would we look to do? Come back to the VWAP and short. Come back to the VWAP and short. Now, a couple things I'm going to add to this. I'm giving you the process, but let's also talk about specifically today. All right. So the process looked really good on NQ. You would have been stopped out on the YM. So let's talk about the process today and some of the market internals that are pretty important. What are the market internals we have to look at? The yen. When I look at the yen overall, kind of strong. So this was indicating weakness. What about the bond market? What's happening with bonds today? Totally wishy-washy. Totally wishy-washy. So yen says short stocks. Bond says I have no stinking idea. Australian dollar says, remember we have a couple markets we look at. Australian dollar says I'm kind of strong, but not really convincingly so. It's not saying to short stocks. It's not really screaming to buy them either, but it's relatively strong, right? What about the VIX? What about the VIX? What does the VIX say? Strength, we have clear up or down trend. VIX is screaming at us to buy equities. A weak VIX tells us you want to focus on the long side of the equities markets. So heading lower on the VIX is bullish for stocks. So what do we have so far? Yen says short stocks. Aussie says, I'm not really sure, but don't short stocks, right? The bond says, I'm not really sure if in any direction. And the VIX says, we want to do what? We want to buy stocks. So when you just look at those four, you think, well, yen says, yen and sort of bonds sort of void each other out. And then I've got Aussie says okay and VIX says hell yes to buying stocks. Not a clear picture. Not a clear picture at all. So when I don't have a clear picture, do I want to do anything? When I have, we have the options expiring today, do I want to do anything? Today would have been tough. Today would have been tough in that regard. But if you have a clear sign from those four, you probably have a darn good day. When it's wishy-washy, you'll try to just kind of categorize. Aussie's kind of meh, but no short. Yen is short. Bonds have no clue, and VIX is yeah, buy. It's minorly bullish. So do you want to short the equities in a minorly bullish environment? That's really the truth. That's it. Was today easy? No, not in any way. Not in any way. Okay? Worst comes to worst, you look at the short, you get stopped out, you look at the long and the NQ, and you win. Now, we've had days like that this week. We've had days where we went one for two. We got stopped out of one, the other one kept going. As long as you're not stubborn. Let's say you took both of these, saying, Rog, look, I want to do what we did earlier this week, where you kind of split the difference, went long one, short the other, because who the heck knows? A heavily weighted component within the Dow could be behaving in a very different way than the heavily weighted components in tech. And that is very true. That is very true. So what do? You take them both. What if some of the heavily weighted components in the Dow are having bad days and there's not that much weighting for those NASDAQ components within the Dow? They could go their own two ways. That's very true. But what happens? You just take your medicine, you get the heck out, and you leave it alone. You say, we breached the downside, I took advantage of the VWAP, and we took out the clearing range. Ouch. Ouch. That did hurt. That did hurt. Now, I've given you all other ways to manage around the VWAP, but what I'm trying to tell you here today, gang, is today's trading was very difficult. Why was it? And let's not take a look at the setups. Let's step back a few more steps. Starting with the market internals. What did we not have? In the early stages, let me leave you with this thought. In the early stages, if you're day trading, if you're saying, Ron, I have a wishy-washy set of market internals, meaning Aussie, yen, bonds, and the VIX. It's wishy-washy. What do? You know what's a really good thing to do? Nothing. Because guess what the market's going to do on Monday? It's going to open again where we can hopefully get another and hopefully clearer reading on the overall sort of the market internals, the way I look at them, of the indices. That's super important. I know we kind of deep dove specific to intraday, but this is very much what I'm doing right now. I want to free myself up psychologically from what's happening in the broader averages. And let me leave you with the broader averages here because I think it's really important to put all this within context. All right, let's start with the ES. Are we going anywhere new? No, we're just up today. I mean, I'm even gonna zoom in a bit. Are we going anywhere new? Are these brand new highs? Nope. We're just chopping back and forth. In fact, we've been spending most of the week chopping back and forth. What about the Dow? Now remember, Dow and Russell are the two indices that I find are more, from a relative performance perspective, I find these to be weaker. Is the Dow going anywhere new? Don't let the 1 minute chart skew your view. A lot of folks do that. They look at the big move on the 1 minute and go, oh my gosh, where's this market going? You step back out to the daily and you look at it and go, it's going absolutely nowhere, right? So this is where the longer term trader in me is like, we're not going anywhere. This market's just, just crunching around in a range. Really easy to see that. And then finally the NAS, which is probably our strongest of the four in index futures contracts. So going anywhere new? Are we taking out a new high? Are we taking out a new low? Or are we chopping around in the same Darvas box that we've had for a while? So the one danger in being so nimble and 1 minute focused is, you look at a chart on the 1 minute chart and go, oh my gosh, look at that move. And make sure you juxtapose those daily time frames. Otherwise, it's really easy to get lost in the woods because you've completely dropped your compass. And this, the daily, the end of day, here it is, end of day, that is your compass. All right. So are we going anywhere new? No. Are we rallying to end the week? Yeah. A lot of people saying plunge protection team? Maybe. I mean, remember, we do have finally the vote on the new stimulus, right? That's kind of old news. We've got some crude oil strength, a lot of VIX weakness, and yeah, I guess people want to buy stocks, but really in the bigger picture of things, we are going absolutely nowhere, which is another reason why when markets are contained in ranges like this, you want to be nimble. You want to be a day trader because we're really not going anywhere. So I hope that helps and kind of sets us up really well for next week.